Greetings friends on the Cryptosphere channel. Today is Sunday, and whatever further holidays await us, the world markets are starting to come out from under them, and economic life will be trying to kick into high gear. Just today we'll talk about the events that await us next week. As far as the US is concerned, the 9th is also a holiday, but this will not prevent the markets from seeing a number of statistics, and in fact the week will be the first statistical test of the year. Well, we move on to the Chicago Mercantile Exchange. It has been working since the crumpled, and on this crumple, we can see how the gap was organized on the first day. Judging by the hourly candlesticks, this exchange was launched on January 1 for only 1 hour, no less, and as practice shows, the gap between the first and the second indicates the future interest of traders near the mark. Trader interest near the $94.30 mark. And in general, the closing of this exchange took place at the mark of $99,140, which is very close to the round cherished mark. There is one small detail. Because of the holidays, the reports that we review every week were not published, meaning the actions of different types of players on this site. They will be published tomorrow, but tomorrow they will probably not be relevant, so we will look at the actions of the players in more detail next week. We are not leaving the derivatives market just yet, and let's take a look at the open interest. And of course, it was hard to expect increased trading on days when the whole world is celebrating the transition from one year to another. So, the open interest in general fell to almost obscene levels. And who does not know what open interest is? It is the sum of all open positions, and certainly in the coming week we can expect an increase in the activity of players. Well, again, it is an alarming moment. Sooner or later it may start to affect. I am talking about the calculated leverage ratio. This shows how many positions are opened on exchanges. Just with open leverage, and for Bitcoin it is the strongest values for 2 years, and for Ethereum it is a historical maximum. Again, we see on Ethereum that this leverage was not built up in 2 seconds. It started to grow somewhere from the summer of last year. A lot of people want to take risks, and people who like to calculate everything. I am talking first of all about whales. Take advantage of such situations. We periodically analyze the situation on options futures, and we see where the main pain point is, which helps us guess which way the players are betting the most. For now, I am just pointing out that open interest is falling, while leveraged positions are rising. Somewhere there is some kind of imbalance in the derivatives market. The next thing we pay attention to next. The week is dedicated to crypto ETFs, the redness that is in Bitcoin ETFs. The picture is on the left. Well, on the 12th of January there was a record current from BlackRock. However, the next day they corrected themselves and we got a good inflow in principle, and in general, we ended this week with an inflow of almost $100 million to $1 billion. On the Ethereum ETH, things are much more modest. Although historically Ethereum has behaved much better in terms of price than Bitcoin in the first 3 or 4 months of the year, so it is probably also worth keeping an eye on that ratio here. Of course, if we look more broadly at ETFs, we periodically see various forms of ETFs appearing here and there that are tied to MicroStrategies and Bitcoin. We also see filings for Solana and XRP. In general, the development of this instrument will also be in the orbit of our attention. A couple of cryptocurrencies. Strong news is like radio waves, as if they are there, but no one can see them without a receiver or other tools. FX Exchange. We said in the last video that they have $16 billion to pay out, and in all next week they will be paying out. Whether the money will make it to the crypto market is not reliably known, but somewhere here some kind of radio wave it is going to go through the cryptocurrency market anyway. Same with Michael Saylor. It seems like his purchases do not catch on anymore, and a lot of people are saying, geez, I wish it'd stop buying, or else it is having a negative effect on the price at all, at the time this statistic is published. But in fact, it is much more serious. JP Morgan claims that 28% of the record capital inflows into the cryptocurrency market in 2024 came from MicroStrategy Bitcoin purchases. A quarter. That is, $1 in $4 was from MicroStrategy. Would you agree that's an impressive statistic? Well, that's the radio wave. And we just have to tune into this wave, so as not to lose sight of it, because MicroStrategy gives us something to talk about. I think there will be plenty to talk about next week. According to the Telegram channel Kopiechka in the Purse, in the United States, the court will pass sentence on Trump on 10 January. However, the judge himself said that no serious measures will be taken against him, but in any case, there is little chance of what. One eye should watch it with one eye. In general, against this background, I hint that everything that is related to American politics, this new Congress, these additional appointments, this interview of possible future important figures that may affect the fate of not only cryptocurrency, but in general in all financial markets, all this, we must carefully analyze. And I would add that there is a possibility that it is in the last 2 weeks that Biden and his administration may go off the rails, smashing everything left and right. Several of his controversial decrees are already being discussed in America. Here you are, one example. He screwed up there, or rather banned the takeover of an American steel company for $14 billion. I will not tell you in detail, because this issue is not about that, and there are certain controversial decisions, but to his own, he does not forget to do nice things. He's rewarding his top donor, George Soros, with a medal. Sam Bankman-Fried was also a major donor, but instead of a medal, he probably got an extra scoop of grub. Next. A typical set of charts for my Sunday video. On the left you see the events, but it is mostly the event for the various coins and the next day for that event. Well, on the right, unlocking tokens. This week a moderate amount of $242 million. Moving on to the traditional market, and we can see that unlike the last 2 weeks, there are still some companies here. But it is a remnant. Of course, it will not affect the market in any way. But the importance is in another way. In a week we will get the reports of banks, and it means that in a week the reporting season will start. More details already, of course, next week. For now, I will move on to the important statistics and events that are expected. The main event will be on Friday, of course. The non-farm payrolls, and those who have been in the markets for the last 6 months know that this data can seriously either bring down or cheer up the markets. Just think back to the 12th of August when the market just crashed and fell for several trading sessions, and then Bitcoin fell to $49.30, and it was only 6 months later, so we'll have to keep an eye on such marks. Well, analysts say that employers probably moderated the pace of hiring last month and maintained a healthy number of jobs. They are also projected to increase the pace of hiring in 2025. So, according to analysts, the number of jobs increased by 163,000 in December. This data will be more or less as the labor market has moved beyond the distortions that were caused by hurricanes, strikes, and so on. Friday's monthly employment data is reportedly unlikely to change a Federal Reserve official's view that it could slow the pace of interest rate cuts in the face of a solid economy and inflation that has all but stopped going away. This is where we'll be interested to see on Wednesday the minutes from the Fed's December meeting for more information on just how torn policymakers were about cutting rates by a quarter point. And after all, we know that only one Fed member dissented. I'll remind you that right then, after Jerome Powell's speech, the markets plunged into money chaos. As for unemployment, it is projected at 4.2%, and average hourly earnings growth should slow a little bit from the previous month, which should indicate that the labor market is not a source of inflation if the consensus forecast works. Also, a separate Labor Department report on Tuesday is expected to show little change in vacancies in November compared to the previous month. Not to ignore the speeches of the Fed members, both Lisa Cook and Christopher Walker will speak, but a few others will give their positions. That's basically all the events of the first, more or less full-fledged economic week. That's all. With you was the Cryptosphere channel. Subscribe if you are not subscribed yet. Click on the bell not to miss new videos, because there will be more interesting things next. Bye bye.